The Japanese yen's, JPY, recent performance against the US dollar, USD, has been a topic of interest for investors and traders alike. While the JPY has been struggling, the USD has been on an upward trajectory, and the pair US dollar to Japanese yen has been climbing towards the 155.00 psychological mark. But what's driving these movements, and what does it mean for the future of these currencies? Let's dive in and explore the factors at play. The yen's weakness and the USD's strength. The JPY has been on the back foot, dropping to its lowest level since February 12 during the Asian session on Tuesday. This weakness is primarily attributed to uncertainty surrounding the Bank of Japan's, BoJ, next interest rate hike. With Japan's new Prime Minister, Sanai Takaichi, advocating for aggressive fiscal spending and resisting policy tightening, investors are hesitant to commit to further rate hikes. This uncertainty, coupled with receding safe haven demand, has undermined the JPY's value. On the other hand, the USD has been climbing to new highs since early August. This is partly due to traders scaling back their expectations for another rate cut by the US Federal Reserve, Fed, in December. The Fed chair, Jerome Powell, recently pushed back against market expectations, assisting the USD index, DXY, to build on an uptrend and reach a 3-month high. The role of the Bank of Japan. BoJ Governor, Kazuo Ueda, dropped some hawkish hints last week, signaling the possibility of a rate hike in December or January next year. This, along with speculations that authorities might intervene to stem further JPY weakness, could be holding back bearish traders from aggressive bets. However, the BoJ's reluctance to commit to further rate hikes, given Prime Minister Takaichi's pro-stimulus stance, is keeping the JPY depressed against the bullish USD. Technical analysis and outlook. From a technical perspective, last week's breakout through the 153.25 to 153.30 hurdle and subsequent strength beyond the 154.00 mark was a key trigger for US dollar to Japanese yen bulls. Oscillators on the daily chart are holding comfortably in positive territory, suggesting a move beyond the 154.75 to 154.80 intermediate hurdle and towards reclaiming the 155.00 psychological mark. However, any corrective pullback seems to find support near the 154.00 mark, followed by the 153.30 to 153.25 resistance turn support and the 153.00 mark. A decisive break below the 152.00 mark could negate the near-term positive outlook and drag the US dollar to Japanese yen pair to the 151.55 to 151.50 area en route to the 151.10 to 151.00 key support. The safe haven factor. The Japanese yen is often seen as a safe haven investment, especially during times of market stress. In turbulent times, investors are more likely to put their money in the JPY due to its supposed reliability and stability. This can strengthen the yen's value against other currencies seen as riskier investments. However, the current situation, with the JPY's weakness and the USD's strength, may be challenging this perception. The way forward. As the US government shutdown approaches its 35-day mark, investors are becoming concerned about the potential economic damage. This has led to caution before positioning for an extension of the USD appreciating move and further gains for the US dollar to Japanese yen pair. Additionally, the BoJ's gradual unwinding of its ultra-loose monetary policy and the Fed's interest rate cuts are narrowing the differential between 10-year US and Japanese bonds, which favors the USD against the JPY. These factors, combined with the technical analysis, suggest that the US dollar to Japanese yen pair may continue to climb towards the 155.00 psychological mark. However, the JPY's safe haven status and potential currency intervention by Japanese authorities could limit deeper losses. Controversy and comment hooks. The JPY's weakness and the USD's strength have sparked debates among investors and traders. Some argue that the JPY's safe haven status will prevail, while others believe that the USD's strength and the Fed's policy will continue to drive the pair higher. What do you think? Will the JPY's safe haven status hold, or will the USD's strength prevail? Share your thoughts in the comments below.